The Edgeless Horseman here. It's November the 17th, 2022. Just got asked today on Twitter asked a request for some more Cope, another Cope video. Yeah, so I mean today it's very volatile. Paper gold down 76 or 0.76%, less than a percent. Silver is down almost 3%. Markets had been almost crashing. I think they were down. Well, S&P futures seem to be down over 1%. Nasdaq around 1%. S&P standard down 1.12. The Dow down 0.70%. Dollar is ripping. Rates are ripping. Crypto not really doing anything. But as usual, everything, people get scared to death, and it's like you already know that's gonna happen pretty much. And I mean, like I keep saying, it's like short-term volatility is like the bread and butter of any long-term holder, because nobody's selling today. They're not even selling because, I mean, this is the fun part actually. It's like, how I keep saying that, many of these junior exploration companies that, might actually be onto a tier 3, tier 2, or even a tier 1 mine. If they become mines, that's probably not going to be at least within 5 years, maybe 5 to 10 years. The value of any mine is the cash flow you get from the mine. So a mine that's going to be in operation 5 years from now, it's pretty much totally irrelevant what the actual metal prices are doing today. It's very relevant to any miner right now because this affects them immediately. But I mean, and I made a tweet like, don't forget that, if you have if you own a junior that probably does not have a mine, at least for the next 5 to 10 years, don't forget that if metal prices are down today, 1%, let's say, the value of those mines are going to be down 10%. I mean, just to give an example, it's like, obviously that's not the case because they're not making any money today. They don't have any production today. And who knows what gold is going to be in 5 years or silver is going to be in 5 years? If I had to guess, I would say considerably up. That's why I use short-term volatility. I'm using the volatility in the short term, price paid now, for future value. Because I'm pretty much only in companies that I think will have proved up more ounces in the next 5 years. That is, in my opinion, the only easy way to beat this market. Totally forget about short-term, volatility. Just use it, pretty much. That's what I was hoping today, for example. Okay, everybody's running around with their hair on fire. Hopefully we might see some real flushes in some juniors, which always happens. But back to the point. People are not selling today because metal prices are down today. And, typically a junior or miners are down today. They are down today, or people sell today because they think somebody will sell them lower tomorrow. That is how it works. If a company is already down 5% today, let's say a gold junior, whatever, already more than 3 times what the actual paper price of gold is down. Why would anyone sell that? Because the value of the company certainly didn't go down 5%. And if, let's say it did, then it's already priced in. Now people sell on a day like this because they think it will go down tomorrow. That's why people also buy on days when metals are up and juniors are up. They're not buying because metals are up today. They're buying because they think their miners will go up tomorrow. Because obviously you can't capture anything that has already happened. You can't avoid a loss that is, paper loss that has already happened. I mean, that's basically it. Everybody's panicking today, or not everyone, but it's like people panic selling today. Don't have anything other in mind than the idea that what they just bought or own will go down tomorrow. That's all they're trying to flee from. And again, that's why people buy in the short term on green days, because they think it will trade higher tomorrow. And if we just look at the good old sentiment proxy, yes, we're still at abyssal lows in terms of sentiment. Bear Creek in this case bounced, I think 50% or something, and now it's given some of that back, let's say 30-40% of that bounce. Still, at extreme depressed levels, and it's like what I am saying is like, I mean, fast forward or rewind the tape just a few days. The last update in miners, everybody was happily buying here. They were not buying here. So think of this. You have a pretty, let's say, fixed price value of an asset. Let's say the value is up here. Sure, metals play around a bit, but it's like not too much has changed. People are much happier buying here than here, even though the opportunity might be exactly the same, because the delta from price to value is this here. But why does this happen? Why is nobody, I mean, people are much more inclined to buy here than anywhere down here, and including the same level. Why? Because again, short-term trend. If it rained today, they think it's going to rain tomorrow. If it has been sunny for a few days or a week, they think the weather tomorrow is going to be the same. I mean, I know personally, when I try to short-term trade, I mean, basically, when I buy because I think, hey, I think this is going to go up tomorrow because it went up yesterday, that almost never works out well in the short term. I mean, typically, because I'm not immune to this either, it feels a lot better buying here than here. Because you have recent, people have made money in the recent past and the trend is up. Simple as that. I mean, that could be anywhere, I mean, short-term trends. Because if you look at, all the multi-month or multi-year moves, they're made up of a bunch of weekly trends and daily trends. So everybody's affected by that. Because it feels a lot better to pay more for a company whose opportunity just decreased simply because you see a short-term recent trend up, and you always project it to keep going higher. That's why people don't buy here, because they project it to always go lower. So take today, for example. I mean, it's absolutely meaningless for most of these projects what the price of metals are today. So if you have a longer term case, you think this is super cheap now, this Junior X. I think they are going to be adding maybe 50% of value. Let's say, it's severely undervalued now. Value is here, and you think the actual value curve is going to be something like this. And on day, let's say today, it's down. Price is down. Nothing happened to the company. No news out. Nothing changed. This won't be in production for another 5 years at least, so nothing really in terms of value. Still, let's say price went down 50%. But we know that sentiment always changes, first of all. And we want, I mean, in my opinion, I would want a company that's going to grow all the way until the next sentiment high. Or you can stick with beta plays as well. But it's like, if we take a longer term perspective, let's say this is the fair value curve. And we pretend this trend is like the next 3 years. Okay, 1,382%. Somebody panic sold today because metals are down and juniors are down. And people again sell because they think this is gonna continue tomorrow. And if it does continue tomorrow, other people will sell because they think it's gonna continue. Again, that's why these lows and highs get so exaggerated, because nobody's selling because of the price to value gap. They're selling because the trend is down. I mean, literally that's how it is. It just feeds on itself. That's why cheap becomes extremely cheap, and let's say expensive can become extremely expensive, simply because of the trend. Well, let's say again, a high quality junior is down. Let's pretend this is 10% down, or we can actually, let's just do it like this. Yeah, okay, about 10% down today, simply because the one sold thinks it's gonna go down 10% tomorrow. That might, in the long term, the one who sold might be giving, let's say, a buyer an added 200% return in the next 3 years. Because again, things will always change. And if the story is intact, the value has not changed, only the price. And if it's already extremely cheap, a 10% swing down at these levels have enormous implications for a long-term value hodler. So that's why it's like today. I was hoping to see some panic selling, because if I again own 30 juniors, one that is, let's say, one of the best, or one that I like the most, case fully intact, nothing changed really at all, and that goes down 10% in price, that might be an enormous opportunity over the long term. Maybe I'll sell something that's not down and get a 10% discount, which will add another 200% on that purchase. That is why short-term volatility is absolutely the bread and butter you should use. That's what I call, value shuffling. I don't try to predict the market, or when I try to predict the market, it almost never ends up well. I always end up buying on an up day because I think it's going to run higher the next day. Soon enough, we'll have the next down cycle, and then maybe I'll sell because, again, it's like the trend is down, so I think it's going to go down tomorrow, and then I sell, and then the new trend up starts. My market timing is horrible. My trading is horrible. Only reason I made a lot of money in this market is because because of the buys that I do on when this sector is extremely cheap, and then sit on my ass pretty much. So I do a lot of mistakes still. And that's, I guess, why I have to remind myself of these concepts. I mean, these videos are not only for other people, it's for myself as well, to just hammer in these concepts. And remind myself, like, why have I made money? Because like right now, or I guess, the hodl portfolio will be down, but it's like, I think all three hodl portfolios are trading at like 3 years highs, which would be all-time highs since they went into miners. Why? Because those have been low maintenance, bet on growth, and I do maybe a few reshuffles every month. Depending on the volatility, and then I just sit on my ass. Because there are stories that have done well. So it's like, if you're, think with this way. Those portfolios are higher than here. So even if I knew this is very expensive territory, and you shouldn't be in beta place up here. I today still would have made money, and we're down here. So can you can figure out what's going to happen when this turns for real, because these are like yes, it's shopping a bit at record low levels, and it might go lower still. Because like I saw a tweet, there's a rumor that Michael Burry, for example, is more short the market than he was in 2008-9 or 7-8. The thing is, one thing, especially about commodities, yes, the global economy has severe problems right now. Europe, the US, people expect a recession if we're not already in one. That for sure. I mean, I can easily see that because we have a huge debt problem. Still, I mean, if you look at some of the, let's say, I mean, this is a 5-year chart for. I'm just going to pull up all of these. Uh, 5-year chart, LME copper warehouse stock levels. It's down here. Even though it's incredibly volatile, I mean, it's pretty sure there's a trend here. And even though all this chaos out there, these highs are lower than the previous ones. Nickel, I think it recently 30-day. Yeah, last reading was the lowest in 5 years. And zinc, well, 1 day off from the lowest in 5 years. So I mean, again, from like a long-term supply demand, every additional day, we are right now taking up more metals than we're putting into production. Can global recession tear that apart? Sure. But we're still not putting. I mean, that would make supply come online even slower, I would think. I mean, I don't know how many gold juniors I've seen just in the last 12 months that have tried to go into production. We're not able to go into production. Seen mines, especially in Australia, Western Australia, including Novo Resources, put a mine on care and maintenance. The labor situation, cost inflation, etc. I mean, supply is going offline more than it's coming online, I would say. And you've seen the COMEX, that is still being drained by gold and silver. So there's still a mass movement. I mean, inventory levels for pretty much all metals are near 5-year lows. COMEX is still getting drained of both gold and silver. World is on fire. Volatility is here. Yada yada. I mean, these are long-term trends. These have implications. We're not finding enough metals. So, I mean, as I like to look at it, it's like, you probably know, I mean, I have a very big position in Magna Mining because it's, one of the cheapest juniors I've ever seen. At least one of the most no-brainer, easy to, spot the undervaluation, because we have a third party that put a number on one of their projects and they have 2 now, and that's probably going to grow as well. Absurdly cheap. And one of their main metals is nickel, and they have PGMs too, which I happen to be bullish on as well. Like short term, medium term, who knows? I have no idea. But there are not a lot of new nickel sulfide projects coming online. It was recently announced that like the US military is looking into strategic, giving strategic grants or whatever to metals that are strategic, critical. That includes nickel. So there's still, even though yes we're getting flushed today in paper prices. Well, yeah, kind of. I mean, gold is not even down that much, but it's like there is still a chronic supply problem underneath here, and that has not gone away. So as I see it, let's say we don't go into a global recession, or if we do, let's say we go into a global recession, then also it must take down demand so much that it actually takes care of the supply issues. Because otherwise we could do it like, in stagflationary environments, we have big problems, but the supply issue is so big that the metals don't really go down because there's not enough around. And like I like to look at it, it's like for myself, Magna, for example, takes care of gives me exposure to nickel, copper, and PGMs, also some cobalt. That is so cheap that unless nickel prices and PGMs absolutely craters, I think I will do very well in Magna. That's my base case. If nickel and the PGM shortage and shortage in copper as well, if that becomes a real push to the upside in prices, and we don't have, let's say, a fat global recession, I mean, I think that position alone, given how cheap it already is, if that has even more headwinds or tailwinds, I should say, I think that could multi-bag my portfolio alone. And again, if everything spirals further down and becomes crap, I mean, we already see a run in gold and silver, and we see the crypto market cratering. So if everything turns to crap, when this flush is done here, let's say, liquidity event in miners and paper, gold, silver, my gold silver portfolio is gonna stocks are gonna multi-bag my portfolio. So as I see it, I'm set either way. If we don't have a global recession, gold and silver juniors are still so cheap because right now there's a liquidity event. People are selling because they're scared. They're not selling. I mean, I wouldn't want to buy the overall market because that still looks expensive. Miners are dirt cheap. Dirt cheap. So I'm not sitting in something overvalued, which should go down and stay down. No, they should be up 100-200% already. And that's going to happen one day. But if we go into really, 2011 levels sentiment after, the financial crisis we're having right now, like in the global financial crisis bottom, I mean, the rally out of that was like pure epicness. It was probably, the fattest rally in decades. And this is going to turn up one day, and we're gonna make not that every company probably will be around, but it's like the few that are, I mean, 10 baggers, I think that's very probable. I expect to do more than 10 baggers in some, and you don't need many of those. You don't need every stock to become a 10 bagger, obviously. I mean, if you're down 50% right now, a doubling of the portfolio would get you back to even. And just using Bear Creek Mining here, that's here, this level. That's gets you back to neutral, and it sure, and that would not be a big sentiment high. If juniors are up 50% from here, they are still cheap. So we would be nowhere close to a sentiment high. And again, the chronic supply issue still persists. So if you see a discount today on some of the tier, let's say tier 3, tier 2, tier 1 assets out there, regardless of what the gold or silver price is right now, they will still be tier 3, tier 2, tier 1. Why? Because there are no better mines. So when I see people, let's say complain about some of the juniors, like, I don't know, it's like probably gonna need a better mel price or whatever, and it's like, and you sit there, it's like, well, we have a supply issue, and if those projects are the best ones, what's going to happen? Because every mine in existence today is going to be depleted one day. So as long as you know, what is tier 2 today is going to be tier 1 one day. What is tier 3 is going to be tier 2. Just as the old timers, some old gold mines, 10 grams per ton gold was waste to them. They mined 20 to 30 grams. Today, a 10 grammer deposit is like bonanza grades. That is how the supply, supply issue works. There's a pressure that mines, given that we don't find or put into production enough mines and we consume more and more metals, that's going to require lower and lower quality mines to get put online because we're running out of the best ones. We're going to run out of the best ones. All the best ones today are going to be empty one day. And we're not finding too many. So it's like Western Alaska, for example. So this is a bonanza grade silver system. I think they could, given the base metal credits, etc. And again, it's like base metals in the form of, for example, not nickel, zinc. I think lead is actually, lead, which a lot of these silver juniors have. Yeah, lead 5-year low. That's probably the most drained lately. You can see the supply here. It's like from, what is that, 145,000 down to, 27,000. Now below that, 26,000. That's a whooping, what is that, like 70% reduction? A lot of these silver miners or silver juniors have a lot of zinc and base metal, zinc and lead credits. And again, that's also a buffer. Let's say the economy does well. Well, more zinc and more lead is going to be required. Okay. In that case, this supply issue here, which is already manifested, is going to get worse. And probably prices of zinc and lead are going to go up. Otherwise, we go into a total catastrophe, as we're already seeing a run in silver and gold. When COMEX runs out or close to it, the LME already has the lowest inventory of silver, I think, in history. So it's like, play all these trends out. Theory craft the scenarios here. In what world do we end up, losing? If the economy does well, global economy does well, the supply issue for base metals, etc., is going to get worse. If the economy does not do well, we go into even deeper crap, and the run on gold and silver is just going to pick up until we one day perhaps have a 2011 run. The important thing is that unlike fiat or crypto, you can't print new mines. You can't print supply. You can have dumb policies for, you can ignore, I like the saying, you can ignore reality, which is like we need a lot of more metals to just keep our steady state growth rate going, but you cannot ignore the reality or the consequences of ignoring reality, meaning that yes, you can talk all you want about it, perpetual growth and the green revolution, etc., but you have to actually build the mines to do it. So as I see it, I'm pretty much good either way, regardless of what the economy really does, because we know nobody can just turn on a key and you get all this metal supply needed to come online, because mines are actually, I would say, shutting down right now and not getting into production. Because again, look at it, let's say 10 units that try to get into production and let's say none were able. That would have been 10 new mines, albeit small mines, but that would be added supply. That has not come online. And that's why, and I think it just doesn't go for, gold, silver juniors listed in Canada, and that's why we have a shortage of metals right now. But the important thing is, like, what has happened to Western Alaska? Nothing. They're gonna have 5 drills turning next year. I think they might end up with a silver crest type deposit, bonanza grades. Let's say 800 grams per ton AU equivalent silver. 100. Let's say, yeah, their aim is 120 million ounces AG equivalent, bonanza grade silver and base metals. That could be a mine that is profitable in pretty much any price environment. And as far as I know, it's the only... Well, I-80 Gold recently hit real bonanza grade with gold as well. And that's super cheap as well. Again, if I-80 is worthless or should go down and is not worth the current market cap, this whole sector would be worthless. So how are we going to run the world if, if these valuations were fair? They're not reflecting this. They're reflecting a glut in all metals, including gold and silver. Yet, inventories across base metals and precious metals are getting drained. So it's an absolutely cuckoo market out there. Has nothing to do with fundamentals, nothing to do with long-term perspective. Everybody is selling today because they think it's going to go down tomorrow. And I simply think that a lot of these super cheap juniors are going to go up a lot over the long term. And if I can get a 10% discount because somebody is sold out, fearing, what tomorrow brings, I mean, that's what always happens. Every tick here, up or down, gets people to sell. Here, people buy because they think it's going to go up. Here, people sell because they think it's going to continue down. Yada, yada. Relentless volatility. And it's like, I think I tweeted something about, on an up day, everybody's a long-term investor. Here, everybody's a long-term investor. Here, nobody's a long-term investor. Otherwise we wouldn't get this low. These are ridiculous valuations, especially relative to the metal prices and the value of the actual gold and silver business, especially the gold business. We should never be this low, but we get this low because everybody's betting on what's going to happen tomorrow. And as long as the trend is down, people are going to be more inclined to sell. There is nothing rational about this. There is nothing rational about this either. Well, yes, this was super cheap, so it should already be higher, etc. But it's like this last move here, there was nothing rational about this. First Majestic was pricing in a way higher silver price than where it was. And here miners crashed without gold actually going down that much. Nothing rational. It's just a trend formed, and then everybody bet on the trend continuing. Again, that's why it's a lot easier to buy here than here, even though the opportunity might be exactly the same. And why most people, let's say, get in here instead of getting in here and buying all the way down. Because let's say it goes... another example. Like, when we own something, we're obviously betting on this stock to go up someday. Typically tomorrow. But some juniors in the last week or two are up, say, 30%. Some are up 40%. Great Bear was up 50%. And that feels totally normal to people, and they don't sell because they think that's going to continue. But think about that. If you average even 10% per week in any stock, 365 days in a row for a year, 10% compounding, that's never going to happen. So take Western Alaska, for example. Here you have here you have the actual trend, let's say. But it's made up of like runs and dips and runs and dips. You can't ask for this to continue forever. If this compounding rate here, this period here, continued forever, like like we for some reason expect. I mean, Western Alaska would be up, I don't know, 30,000% in 1 year. That's not how the market works. And nobody has, I mean, for a long-term investor, for example, it's like the same with Great Bear. I mean, that went sideways to down for like 2 years. But if you had held that long enough, you could not complain about getting a 10 or 20 bagger in like 2-3 years. Because the trend, the compounding of the trend was really, really good. And my goal is 50% per year. If this continued like this forever, that would be a compounding rate of 20,000% per year. You can't ask for that. But everybody wants an ever upward sloping growth curve in the portfolio. And they think how to get that is to, again, it's like if it's up, they bet that it will continue up. If it's down, they bet it'll continue to go down. And since nobody wants to sit on paper losses, nobody wants to buy something they think can go down tomorrow. That's why you have these trends. It was probably overvalued here. I think it's undervalued here. That's going to repeat and repeat. And even though you don't time this at all, let's say, the best option obviously is like always buying low. Because I'm a really bad seller. I don't think I sold a share up here. But that's okay, because like I've held on to it. So I can't complain, even though with Western Alaska being down, I don't know. Right now, 60%. I'm not complaining. I'm not complaining at all. Why? Because the trend has still been up. Same with Snowline. But everybody gets pissed as soon, because everybody buys in here and then it goes down. But if you just sat on your ass, took a longer term perspective and actually bought the dips. I mean, I bought some Western Alaska today. I mean, not from a technical perspective. I mean, this doesn't look too good. I mean, it just broke, one could say, the trend line. But I don't care, because nobody's buying here. Everybody's seeing this. Oh, the trend is down. Silver is down 3%. It looks like it broke a trend line. I mean, how many are actually buying here? No. Why? Because they think it's going to go down tomorrow. And if it goes down here, they think it's going to go down to here. And if it goes down to here, they think it's going to go down to, etc., etc., etc. But as I've shown a bunch of times, like absolutely no sense not to be a buyer here. No point in history has this market been this cheap forever. So it's like, again, it's like automatic. You should be an automatic bull around this level. And again, this short says absolutely nothing about the short term, but it says everything about the long term. We have these fat flushes every 7 to 8 years. And out of each one of them, you have rallies you can't really believe. But nobody cares about that. People sell today because they think it's going to go down tomorrow, and buy here because they think it's going to go up tomorrow. That's how people lose money. I mean, even in some bull trends, people lose money because they buy every time the short-term trend is with them, just ready for the next natural profit-taking event. Then they sell because now I think it's going to go down tomorrow, so they sell, then it starts going up. But if you zoomed out and actually looked at, hey, I mean, there's 0% chance that I'm overpaying for this sector right now. Absolutely zero. I mean, how hard is the market to beat, really, with some patience and common sense? And especially, it's like, take Western Alaska. Who knows how much they would have added by next year? Their goal is to have an inferred resource, bonanza resource of 120 million ounces AG equivalent. How much is that worth if they are able to do that? The market cap right now is, 110 million. Does that reflect, a year from now they might have one of the largest bonanza grade silver base metal resources in the space. That could possibly be a mine at any given metal price environment, pretty much, a tier 2, tier 1 mine. No. So what is the problem really? The problem is that, again, people don't think about that at all. They just never want to see their portfolio in the red. So I've been looking around to this. Like, I hope we saw some 10%, 15% flushes in juniors. If the case is intact, it's already cheap. It goes down 10 to 15%. Like I showed, the future expected return difference might be 200%. Let's say I have some dry powder, or let's say I have, again, 30 stocks. One stock is unchanged, and I expect a 1,387% return on that one in, let's say, 3 years. And I see one stock down 10%. So I could sell this and net myself a 200% extra on that money. I took a permanent loss in, but bought something that was down 10%. I might have created 200% of future expected returns. Added 200% on that reshuffling. Simply because somebody sold today because they think it's going to go lower tomorrow. That is a considerable amount, given that the stock market averages 8-9% per year. And lo and behold, again, the HODL portfolios, which aren't really that active, are in the green. So I mean, I know I keep hammering on about this, but it's like, I mean, it all makes sense, doesn't it? The stocks go up and down. Stocks go up and down. Stocks go up and down. If the story is intact, it's going to go up over the long term. How do you take advantage of that? Buy as low as possible. I have no idea. Maybe Goliath goes down here. That still doesn't change the fact that looks like one of the better, at least, yeah, that looks like that's going to become a mine one day. And the supply picture for pretty much all metals so far right now is getting worse and better for anyone that has future supply. I mean, it's really simple stuff when you think about it. It's just that nobody plays this game. Everybody plays the guess where the stock is going to trade tomorrow game. That is literally that. And of course, I mean, you get affected. It's like, see everything, let's say, well, I mean, not super crashing, but what is the fear that comes into your mind as soon as you see a day like this? Personally, I know what my impulse is. Oh crap, the portfolio is going to be down today, and oh crap, maybe it will be down a lot tomorrow or next week, or we're going into another, financial crash. So I'm not immune to it. I know that's the fear, and since I have that fear, I know everyone else has that fear. It's just that I force myself all the time to disregard that fear, not do anything or try to. I do mistakes sometimes. And to just think about this short here. And to just keep thinking about the micro. If a company can add significant value, if a company could add 30% of value, 30% more ounces every year, that's a compounding value rate of 30%. So silver, one could say it's like, I know that's not how it works because margins, but one could say it's like, yeah, okay, if I add 30% ounces, maybe silver, for example, could go down 30%, and I would have the price and value would still match. Yeah, so it's like I almost think it's impossible not to beat this sector because everybody's playing the same game. Guess where the stock is going to go tomorrow? That is literally that's why everybody's selling today. They're not selling because the stocks are down or open down. No, that already happened. If it opens down -5% of stock, that has already happened. You're selling when it's down 5% because you think it's going to go lower tomorrow. That is what people do. You can't capture a sale or a price fall that has already happened. So think about that. Again, it's like nobody's selling today because of today. They're selling what they believe tomorrow is going to bring. If it's an uptrend, they buy because they think it's going to go up tomorrow. If it's a downtrend, they sell when it's already gone down because they think it's going to go down tomorrow. And that's why everybody ends up shopping themselves to pieces. And you've seen the silver price. I mean, that goes like this lately. So you can just imagine, again, how, I mean, silver has been more volatile than the stock market is, in a year, in the last, 2 weeks, let's say. That is how people grind themselves out of the game, because they're playing to guess the stock price tomorrow. Meanwhile, anyone with a longer term perspective would, first of all, net buying here for sure, because they see the long-term trend is like, yes, it's only a matter of time. This is going to go way higher, like it has done every single time in history. I have to wrap this up. I have a podcast coming up. Thanks for listening. Not investing advice. I own shares of Western Alaska, Magna Mining, Goliath. They're all sponsors. Again, I don't share your profits or your losses. Only do what makes sense to you. Not investing advice. Bye bye.